Last week we said the breakaway move would be S&P 65, 6,600. So I think that's still intact. I don't think that one data point is enough to change a thesis around the trajectory of inflation. And our base case remains that this is going to be ultimately viewed as transitory by the market.
Bitcoin is a technology, but humans are not technologies. We all have to live together. We all have a lot of uncertainties we're navigating with, and that's what makes our life very rich. And so the only path forward is Bitcoin has to be integrated into that world and that path of life. So I have a view that in the future, there will be a lot more abundance that comes from Bitcoin as collateral to different financial services and financial access. And that will actually be a pretty good thing at a universal level where everyone can net benefit, and we'll all look at it in a pretty positive way.
Markets aren't just reacting to uncertainty, they're recalibrating for what's ahead. After months of mixed signals, investors are regaining confidence. The S&P 500 is nearing historic highs, and Bitcoin is evolving from a volatile asset into a key part of financial infrastructure. Instead of panic, sentiment is shifting toward long-term opportunity. Tom Lee is doubling down on his bullish outlook, predicting the S&P 500 could rise to between 5,600 and 6,600. He argues inflation fears are overblown, just short-term noise in a much bigger story. With strong fundamentals and steady investor rotation, he believes the market's upward trajectory remains intact and, in fact, inevitable. Meanwhile, Jeff Park highlights Bitcoin's unique role as more than just technology, it's a bridge to financial inclusion. He sees it becoming collateral for global capital, opening access for those locked out of traditional finance. As adoption grows, Bitcoin won't be an outlier, it will quietly power the next era of abundance.
I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure.
As we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well,
the economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move. I think the market reaction, of course, is really how people are positioned. And we at Fundstrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers. Last week we said the breakaway move would be S&P 65, 6,600. So I think that's still intact. I don't think that one data point is enough to change a thesis around the trajectory of inflation. And our base case remains that this is going to be ultimately viewed as transitory by the market. Well, I guess this is the challenge for the Fed, because they're having to make a decision where there's no equilibrium, right? Because the market's tension around whether there's weakness and deviation from the job side versus inflation, it is really the Fed trying to manage expectations and keeping inflation expectations anchored. So a lot of data between now and the next meeting may not be inflation related, but it's really how the market is perceiving these inflation prints. And if we shift towards viewing it as transitory, it makes it easier for the Fed to move forward. I think one of the points, Steve, I would have made as a counter to Steve on mortgage rates is that there's still an excess spread of the 10-year versus the 30-year mortgage. And I think if the Fed resumes cutting, that spread, which is historically 165 basis points, it's currently over 300. So we could see a disproportionate decline in housing costs. That's a lot of relief to a lot of Americans, especially when Powell talks about the pain of inflation. Well, I mean, if we look at August 1 as like a benchmark, because we're halfway through the month, even with today's decline in small caps, they're up almost 4%, which is 350 basis points above the S&P. And Ethereum, which is correlated to small caps, is up 26%. So I don't think we've unwound any of the progress small caps have made following a series of data over the past 2 weeks. So I think today's PPI number is not really being seen as, from a market's perspective, as really changing anything.
Recent inflation headlines look worrying, but much of the pressure comes from temporary factors like energy and base effects, not lasting structural issues. That gives the Fed breathing room, while equities continue to surprise. Mid-caps and even small caps are gaining momentum, signaling this is less a market in crisis and more a market in transition. The bigger picture is resilience. Tom Lee highlights strong fundamentals, while Jeff Park points to Bitcoin as more than an asset, seeing it as the foundation for a new financial system. Together, they show markets aren't breaking, they're evolving.
I think that's why people are so focused today in the United States with two legislative agendas. One is, of course, Bitcoin, the strategic reserve, and market structures around crypto. But the second is stablecoins, right? And this is merging now at a level where it's taken a powerful political force. Rewind 50 years, and at 1971, when Bretton Woods came undone, what you've come to see is that the world that has sustained itself through the fiat economy is no longer sustainable. And I think Japan is really important in this story because it's actually Japan who's been on the other side of being the largest creditor of the US financing markets, where they are also now realizing that they have to develop a way to grow out of it, right? If you've been watching the US 10-year rates, it's around 4.5, 30 years north of that, but it's Japan where we're actually at historic long-term rates that are imploding. And so if Japan can't fund their own economy in reliance of the American export, they're going to want to find a different solution. And Bitcoin has now entered the scene, in my opinion.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
Not just because it matters for the Americans, but it really matters for almost all of our trading allies to come together to reimagine what that new monetary order should be. And these Bitcoin treasury companies are representing one of the first innings of integrating Bitcoin into the regulated securities capital markets. And we're going to see a lot of different bullish opportunities come out of that. So I think there's going to be variations to how Bitcoin can be useful for certain consumer-facing businesses. In GameStop's example, I think that there's a very high overlap between people who like to play video games and people who might be interested in crypto. And so if you can actually use Bitcoin as a distribution tool to adopt consumer loyalty, that is actually not a financial engineering story the way MicroStrategy is. That's more of a, hey, how do I get the best customer acquisition strategy to onboard my next customers for real operating metrics? So I think we're going to see real businesses that are using Bitcoin for growth that is operating entities. And then, of course, you'll see the ones that are amassing a lot of Bitcoin to engage in financial services. So Cantor is an example where they are launching a big entity with Tether and SoftBank. And they've made it clear their goal is to offer Bitcoin in programs where there's a lending market, a credit market that will be built on top of that. And for that, you do need scale. And so that's a totally different game. We're talking about what a Bitcoin bank could look like that exists out of an operating company. And I think we're going to see a lot of things that fall in between that spectrum as well. I think inflation, in a way, has now become proxy towards the growth model itself. Like if you're growing, it's because there's nominal growth as well as real growth. But generally, the challenge being that it's hard to keep up. Like your wage has not kept up with the actual inflationary growth. And so the idea here, I think, is that Bitcoin serving as a store of value will help lessen that inflationary dynamic, which means you can still grow in a real way. But to outpace that without inflation, I think is the challenge. And it requires a real fiscal discipline by governments around the world to be able to provide for it. And Bitcoin is kind of bringing everyone to the table and saying, hey, if you want to opt out of that, here's another alternative. It's Bitcoin. And that's going to give the expenditure problems a little bit of challenges. The US's greatest export is the dollar. There's no doubt about it. Everyone wants it. And why do they want it? They want it because they think it's a good store of value. They recognize that it's the universal risk-free rate as to benchmark everyone else's returns. And three, the backing of the dollar and its creditworthiness by the United States government is a very strong signal. And those three reasons makes the dollar a very useful financial export. At the same time, we are now hitting record GDP growth debt levels with GDP in ways that are creating some challenges. You might have seen the S&P recently downgraded the US credit for the first time in ways that has shaken the world to say, hey, is this not as good as people thought it was? And I think those are the challenges that the US now has to navigate. And so if you're able to adopt Bitcoin as a part of that collateral pool, I do think there is a way where the synergistic outcome can be a net beneficial thing for the United States too. So there's a great world that people don't know much about because we take it for granted. But a lot of things today, as we know it, is built on the backbone of like trade finance, for example. Almost all commodities that move around the world in logistics, whether it is oil or whether it is iron, those commodities have to be financed. And that financing market actually is a little bit gray because they're usually cross-jurisdictional, right? You're usually involving multiple counterparties that are countries. And then there's maritime law, which of course is a little bit removed from everyone's jurisdiction. And so trade finance is this category that is the closest thing you can get to like sovereignless finance, right? And actually, in a way, Tether represents this exact thing, right? Tether is an offshore entity that is participating in the US dollar economy, but it's not really an American company, and it is not a domestic onshore company. And so when Tether announced that the first real market that they're going to go after is the trade finance market, that made a ton of sense to me, because that used to be the business that one might say Switzerland or Singapore or Hong Kong or these tax-advantaged jurisdictional countries, neutral countries that are permitting that flow, no longer needs to be facilitated in that fashion. You could actually do it through Bitcoin, because Bitcoin is censorship resistant. Bitcoin actually does not have allies nor enemies. It is what it is. And so the idea of having an entity that can dollarize the economy with Bitcoin backing can change the entire backbone of the trade finance market. And the trade finance market is by far the largest. It's $1 trillion opportunity. And it's the one that makes the most sense for crypto to go after. But I think the hardest part is most people are very bad at unlearning things they know. And Bitcoin fundamentally challenges you to unlearn a lot of things that you were told growing up. So I think that's the first human condition that is fairly challenging. The second part is that unless you frame Bitcoin to be an optimistic thing, which I don't think the industry has done a great job to date in making the story of Bitcoin or the story of optimism, then it's really hard to motivate people to get inspired by it with a positive kind of willpower behind it, right? Almost it's easier to get people to do things that makes them feel good. But there's this little notion of like, oh, so if I buy a Bitcoin, am I betting against society? You know, am I betting against like the way that we have actually brought abundance and fruition to the world order? And that psychological chasm is not insignificant. And so the way forward is you actually have to infuse the Bitcoin message with hope and optimism and a lot of positivity. And unless you have a lot more of that energy, and it takes time, I think the other challenge is that people dismiss it for societal reasons, that they think this is a net negative, which I think we are on the escape path for at this moment now going forward.
The market isn't panicking, it's adjusting. Inflation may be running hotter, but instead of recoiling, Wall Street is recalibrating. Investors are less worried about short-term spikes and more focused on how the Fed frames its next move. A pause, or even modest tightening, could actually be bullish, signaling stability in a landscape that craves it. And with sectors once overlooked beginning to recover, resilience, not fear, seems to define this moment. But the bigger shift goes beyond stocks and interest rate. Bitcoin and stablecoins are moving from speculation into real financial infrastructure. They're reshaping trade, credit, and even how we think about global money. This isn't just about chasing rallies, it's about a system quietly transforming beneath the surface. So let me ask you, do you believe a Fed pause will spark a sustainable rally? And do you see Bitcoin as the backbone of a new financial system, or is it still too soon? Let me know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.